Okay, so what kind of situation do we have at the moment on gold? Now, from a weekly perspective, we have a market that after this very strong impulse to the upside, the market has broken above this structure level, which was the resistance that we had encountered here, which after the market has broken it to the upside is turned support. So previous resistance, which is now turned support at this level. Now, after that, the market rejected its zone to the upside, and now it seems that the market failed to continue higher. Most importantly, what the market did is creating this candle here, this one with a long wick. Now, when you see a candle with this shape, you expect the next one to fill in the wick. Most of the times, what will actually happen is exactly what happened with this candle here. So, a minor spike to the upside just to fake everybody out so everybody starts to buy on lower time frames, obviously, and then the market actually melts to the downside. Now, if we go and see what is the situation from a daily perspective, however, we have to notice another thing. We have to notice that at the moment, okay, as we are speaking, the market is still respecting this counter trend line. We have seen that overall we definitely have good probabilities is to see the market go lower. However, until the market will remain above this counter trend line and above this structure here, which is indeed a strong structure level. It was resistance here, again resistance here. The market broke it to the upside, turns support. Currently here we had a fake breakout, break back above, and here we have a confluence of support. So we have the support given by this trend line and the support given by this horizontal structure support. So overall, until the market will remain above this area from a daily closing perspective, there is no way in which we can be looking for potential shorts, even if overall from higher time frames we would like to see gold make a drop to the downside to go and basically fetch some liquidity, because at the moment it definitely seems overextended to the upside. Specifically, we would like to see gold make a meltdown to this level here to grab some liquidity. Why? Because in all of this move to the upside, there is only one candle which is not related to the move to the upside, which is this red candle here. And that is the level to which we would like to see gold go. So everything indicating from higher time frames for a move to the downside. However, we have still support holding. So until this level will hold, the market can easily and should actually continue to the upside. Now let's go let's go and give a quick check at what we have from a COT perspective. So commitment of traders, what big banks and institutions are doing at the moment from a gold perspective. Now, if we go and see what we have from a COT perspective, we can see that at the moment we are sitting at 237k net positions. Now, this is a very low number compared to what we had in the past. It's the lowest one. We were sitting all the way up at 335k net positions, and now we have only 237, meaning that yes, we still have longs greatly outweighing the shorts from an institutional perspective with 288k long positions and 50k shorts, but they are taking their profits on the longs. In fact, hedge funds went from having 408,000 long positions to having 288. So a big reduction in the longs, meaning that they're taking their profits on all the longs that they had. So we can definitely expect gold to make a move to the downside and go and grab the liquidity that we would like to see gold go and grab inside of this demand area from a weekly perspective. So how we will be approaching gold with students? Very simple. If the market from here will just explode to the upside, we will not ride this move because we don't have good probabilities. Okay, the market can easily do it and it should do it because it's above support. But if the market will do this move, we are not interested in it. We're not interested in it with students. But if gold will manage to break below this trend line and horizontal structure, then we will have a weekly time frame that is aligning with the daily. And at that point, with students, we will be monitoring price action from a 4-hour perspective instead of this area. There was confluence of support, but if the market breaks it to the downside, it will be turned confluence of resistance. And inside of that area, we will be monitoring price action from a 4-hour perspective with students, waiting for the market to provide to us one of our valid entries And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.